Okay, so this is the fun part. This is what everybody wants, and everybody says, "Oh, I want to learn how to do technical analysis and charting." So I think this is where everybody, got bored on topic 2, and now topic 3. This is sort of what you think is going to be the key to your success, and this is what everybody uses. This is what I use. This is what other people use. There's variations of this, but for the most part, chart analysis is essentially, when you break it down, is the study of human psychology and the reaction of traders to changing market conditions. So when we look at charts, charts are moving for a reason, and this is the thing I try and stress with people when they start learning how to trade is charts are holistic. So there's a reason why something's happening, and the more information or the more reasons you can determine why something is happening, the more successful you will be. So, people say, well, why did it go up? Or why did this happen? Or why did the next thing happen? And it's important as a trader to, start to, digest some of that information, but not only that, but also find it out for yourself too. Because if I just throw answers to you, it's like, once again, looking at math problems is, math is easy when you look at the back of the book. If you look at math questions and you say, okay, well, I don't know the answer, and then you look at the back of the book, you're like, oh, that was easy because I saw the answer. But when it comes to the test, and you're there writing the test, the question isn't going to be the same. And it's the same thing with trading. And I always remind people of, I can give you all the answers, and I can say this, and this. But A, does it work for your trading plan? Is it part of what you're doing? B, do you understand why it's happening? And C, can you adapt if something doesn't happen exactly the way it's supposed to happen? So keeping that in mind, when you look for certain things in the charts, and we go through a certain set of analysis or a set of rules, you're going to see that some of these things start to make sense, and people that were trading before or people that are new to trading, they're going to start to develop these ideas or these senses of what's happening. So first things first, let's talk about time frames. So what you're doing essentially is you're using the 3 time frame approach. And what I mean by that is essentially you want to have an idea of what's happening in the overall market. You want to dive down a little bit deeper to see what's happening in the immediate market, and then you want to dive down to an entry point. And that is going to be how you build your success rate and how you get consistent. Now, when you look at our direction or our time frames, once again, you look at which direction are we going, up or down. That's basically the first step. So your best time frames for that are the larger ones. Larger time frames are more consistent, so they move slower, and you get a better idea of the overall movement. When you look at now the pattern view, so we're looking for specific candle setups, you're looking for a time frame that's 25% less of that. So as an example, if we're working on the trend of a 4-hour time frame, we would be looking at 1-hour patterns. If you're looking at 1-hour trends, you're looking at 15-minute patterns. And then basically your execution or your entry or your trigger time frame is 25% of the previous pattern. So if you think about it, if you're looking at a 4-hour time frame, your pattern would be 1 hour and your execution would be 15 minutes. So you can move that up and down according to how you're going to trade. So when people say to me, Ted, does your teaching work on all scalping, swing trades, blah, blah, blah? Yes, because you're essentially doing the exact same thing, just based on how you want to trade, right? So if we're looking at a higher time frame, you're going to have a wider range of pips. You're looking at a shorter time frame, you're going to have a shorter time frame of pips. Now, what I can tell you is the larger time frames are safer for newer traders because everything moves a lot slower. So think about driving a Ferrari. If you're first out of the gate and you take your driver's license for the first time, you pass your driver's test, and your parents at the time hand you the keys to a Ferrari, suddenly now you have a supercar and you're running around. So when you look at like the 1 minute chart or the 5 minute or the 15-minute chart and you're trying to do analysis there, if you don't even have an idea of what's happening in the overall picture or you're not experienced enough, you can't jump to those smaller time frames yet. You can try, but you're not going to be as successful and it will be frustrating. What I always suggest is, start at a 4 hour or even a daily and then work your way down just so that you understand what's happening. And nobody says you have to stick to just 3 time frames. Maybe you want to use 4 time frames. Maybe you want to use 5 time frames. But the idea is you want to present yourself with the most information possible in in an ideal situation where you will understand what is happening at that point. So here's some quick tips about analysis. Indicators, moving averages, lagging categories of derived lines, it's all mathematical data. Most indicators are lagging and price moves those indicators. So when I talk about what type of teaching I do, we do price action because price behavior is the best analysis. So when you think about that, the best prediction of price analysis will probably be your candle patterns. Looking at indicators, they're lagging. So they're based on previous price information. So you may not get a full digestion of what's happening. We'll go through some indicators. I'll show you indicators that I've used before, but for the most part now, I don't use any indicators when I trade. When I first started out, I did trade with indicators. I did get some information from them. Once again, when you are using multiple sources of information, you're using that as confluence. And the word confluence is essentially saying how many different pieces of information can match up with what I'm trying to do. So am I getting enough information to make a proper judgment call? Because that is what trading is. Trading is making judgment calls every day. Nobody can tell you that it's going to 100% go up or 100% go down. You have to make a judgment call based on what you've done previously, based on prior charts, based on the current market conditions, things of that nature. The next thing I want to talk about is don't call tops and bottoms. Don't try and say, okay, well, now the trend is reversing, or, oh, we hit the top, now it's going to go down, or we hit the bottom, now it's going to go up. A lot of people try and do that. You're just going to hurt yourself. The best thing I can say is if you know that the trend is starting to exhaust, if we've been going up for like 3 days and we're going to get to a point where it's going to have to correct a bit or reverse, set a pending order further down in that price range. So, if we're moving up all the way over into a certain direction, now we're thinking we're going down, set a pending order, because then that allows you to, in terms of, when I say like a psychological standpoint, is you don't have to sit there in front of the charts and watch it hit that price. You want to, when it hits that price, more than likely you're moving in that direction. So it's really important in that respect to don't try and say when things are going to happen or when they're not going to happen. You have to move and be very agile with the markets themselves. Volume precedes price trends. So if we look in terms of Bollinger Bands, things like that, you'll see as market slows down, as volumes slow down, Bollinger Bands tighten up, they get smaller. As the market expands and there's more volume, you'll see them expand. More movement in the price. So once again, patterns capture the footprint of the DNA and of the crowd's analysis. So people have the same reaction to patterns. If something goes up, everybody buys. If something goes down, everyone sells. So the idea here is there are emotional and psychological responses in the same atmosphere. And you have to remember when institutions are moving the markets, they're always going to be a human behind that movement. So the more things you have to take into account, or the more things you understand, the better off you're going to be in terms of the way that you do your analysis. So what I mean by that is if you understand that a 9-to-5 job opens at 9 to 5, and if you've ever done something like that, you'll know that institutions have a very set pattern. Everybody comes in at 8 o'clock to start the day. Everybody takes lunch at 12. Everybody comes back at 1. So when you start to understand just the daily routines and sort of the psychological effect of humans, you'll start to realize that there are little keys that you'll figure out, like, market moves at a certain hour because of this. We get an initial push because of this opening. This market's opening, this stock market's opening, this market's closing. All these markets are open. So when you start to understand those little things, those are patterns, and that's when we say that we see the same things day in and day out. And you'll see a lot of people from the groups talk about Instagram, and they say rinse and repeat. This is what we mean, because every day at certain times the same things happen, because it has to happen. And the reason why I say it has to happen is institutions are exactly what they are. Institutions, they are put there to do certain things. So they're there to collect money, make money, transfer money, move money. So when you look at institutions and you say, okay, how am I going to battle those institutions? You have to realize that they can't be as agile as us. And what I mean by that is they report shareholders, they have directors, they have risk management procedures. There's hundreds of people working in those corporations and those institutions. They're not just a one-man show like you or I. So, they're only going to move the market so much. We're not going to have volatile movements in an hour. We're not, unless there's a big news event. But what I'm saying is, for price to move in such a dramatic fashion up or down and sustain that, you are now changing an economy. So, when you look at that and you say, okay, what are the patterns? You'll start to see what goes up must come down, what goes down must come up. You just have to understand how that is happening, and that is the key with trading. Is, like I said, don't call tops or bottoms, but you're trying to get involved in where you think the best action is for that specific pair and for your trading plan. All right, so here are some major candle patterns. I know everybody sees these. I mean, really, I took this from Google, so I'm not giving credit for what I did here. I just copied and pasted this. We have a lot of books in the Google Drive, and you'll hear me mention Google Drive till nauseum, but we have a lot of stuff in there that will give you information on this. These are things, and I don't want to sound arrogant, but these are things, part of your homework, part of you as a trader. You got to learn these things to help yourself. Like, if I show you bearish engulfing, and I'll show you all these candles, I'm going to show you them. That doesn't help you as a trader. You have to go in there and practice this. You have to go in there and look for these things, and you have to figure out which candle patterns work the best for you. Maybe it's, 3 white soldiers. Maybe it's 3 black crows. Understanding that and then matching up with your trading plan, what you're looking for. If you've read Naked Forex, we have that book, in the Google Drive. That'll give you some more indications of what's happening with the patterns. Putting this all together with the rest of the information I'm going to provide you here, this is really going to help you. So, you can see right away, we can go through them rather quickly, and what I'll do is I'll sort of highlight some things. So, you have your bearish engulfing. You have an uptrend with bearish tweezers. So, your second candle here is a bear. Bullish engulfing. We have bullish tweezers for a downtrend. We have doji candles. And, when we start to talk about specifics, these are some things I want to highlight. Dojis aren't reversal candles. Dojis are indecision candles. So what I mean by indecision is that the market can't decide which way it wants to go yet. So when you look at certain things, these candles are just giving you information. They're not telling you that this is exactly what's going to happen. It's giving you the probability that something will happen. You'll see here a morning star and then a downtrend, a shooting star, or uptrend. We have 3 candles here. So, if you looked at something as an example on a chart and you saw 2 candles in a bull formation, more than likely the third one is going to appear. You start to understand these things, and it's the same thing here in a downtrend. You have your 3 black crows. You start to see that more than likely another one will appear, but this comes with experience, and as you start to get better as a trader, you're going to start to recognize these on, and like I said, you're going to choose ones that work best for you. Can you make a lot of pips on reading candlesticks alone? Yes, you can. I'm going to assume the black candles mean that it doesn't matter what color the candles are. No, you just have to understand which ones you're using for your bull and which one you're using for your bear. Can candles apply to minute charts also? Yes, we will go through that. What does the green and the red represent? So green usually represents a bull and red usually represents a bear. So bull candle means going up, bear candle means going down. So you have a bull trend, the bull trend is up, the bear trend is down. So that's there. What if you have a combination of patterns, one is saying long and the other is saying short? Which one do you go with? Yes, we will talk about that as well. It's all a part of your trading plan and what you're looking to do. All right, so this chart is from last year. I didn't update this slide, so you'll see I was still trading $10 lots. Oh, the fun times back then. So you can start to see here right away, I labeled out some of candle patterns on these charts here. How do you determine which candlestick pattern will occur next? Oh, if you could do that, you'd be in like super genius. You'd be a billionaire. You can't determine that. You can only go on based on what's happening in the market, and we will go through that. All right. So let's take a look rather quickly, and you're going to see here. Number one, we have a bearish engulfing. So what does that tell us about bearish engulfing? So we had this up bull trend. So we had a bull trend. Then we had this bearish candle, which engulfed this bull candle. And then now we had a downtrend. Okay. The thing that I want you to recognize when you start to look at specific candles, this is a naked chart. And this is something that we use as a group all the time, and a lot of people in the groups, as they get more confident, they remove a lot of indicators. But right away here we can see a lot of information from these charts, and you can just necessarily, as you get better, you're going to train your eyes to see patterns. And you can see here we have patterns where we're moving up and down, and as we start to add information to it, the patterns become clearer. So if you were to turn around and say briefly in terms of what we have here, and if we turned around and said, hey, let me draw a line, Ted, and let me see what you're talking about. So if we turned around and we started drawing a line across, you could start to see where things start to make sense, right? Because I'm just drawing this freehand, which is pretty shitty, but it'll do. You can start to see we had a bit of a level of resistance, right? So we pushed all the way up, we tapped that level, pushed all the way down, and then we came all the way up, down, but then we came up again. So you can start to see where, when you see major candle patterns in that instance, we start to see where patterns start to show up again in terms of we're hitting resistance area. So this is what I mean by the market tends to do things over and over again, and it's something that as you start to learn and as you start to watch the markets, you'll see that there is interesting things here, and there are things that'll happen. So now looking at our next candle, we have here what we would consider 3 black crows, right? So we have a candle 1, 2, 3. We had that downtrend there, and it continued. Looking at number 9, looks like we have what we would consider a morning star. We had our big bearish candle along with sort of a almost like a little bit of a hammer, more than a candle, but maybe right over here you'd sort of look and you'd see things moving in that direction again, but it did pop back up. Number 3, you're looking at bullish engulfing. So we had our single bear candle here followed by a large bull candle, and we moved up. Looking at number 10, you basically have some dojis. So once again, there's some indecision, right? So we had dojis, indecision, and then we pushed back up again. Number 5, once again, no, number 10, sorry, that was wrong. These were shooting stars, so we have our little 2 formations, and then we were able to push up. Number 5, we have our dojis, so you can start to see where we start to move. There's, even though these were indecision, we still moved down, then suddenly shot back up. Looking at number 8, once again, we have inverted hammers that push back up. Number 4, we've got basically bullish tweezers, so we have these 2 candles right over here, and then we have now a downtrend. Looking at number 6, you've basically got bearish engulfing once again, so you have the candle here, and then you have your bear candle further downtrend. Looking at number 7, you've got your hammer candles once again, so you're looking at similar things to push all the way through. So like I said, the key thing here I also want you to remember is you're not going to see the exact patterns that you see in books. Don't look for the specific size of the candle to match up. These are very subjective. So what one person may see, they may not see in other instances. But it's very important just to have a general idea of the pattern. Isn't there a wrong 2-bar reversal after number 10? Yeah, I guess. I mean, there's, like I said, these candles will be subjective. The idea really is to understand the momentum of what is happening with these candles to give yourself an idea of what could potentially happen next. And when I add some items to this list, you'll see how it starts to make sense. So these are indicators, okay? So this is what you want to do is if you want to set up your charts, this is what your charts are going to look like when you use indicators, right? So you can see as an example, when we start working with stuff here, so you have all your patterns, so you have Bollinger Bands here, you have a whole lot of SAR moving averages, you have a trend line, you have your I would say your Fibonacci here. So if you put all these things together, it's going to tell you where the market's going to go. See, you have your ADX giving you information saying we're compressing. Our volume's great right now. We have stochastics that are almost maxed out. Your RSI is moving up, and then you have your BWFI index. You have a lot of information here. And honestly, if you just put all these things on your charts, you are going to be an excellent trader, and you guys will beat the market every day. Okay, so everyone start drawing this chart out, put everything together, and now you'll see all these indicators. This is how everybody makes money. Oh, I'm waiting. Here's all the questions. Oh, yeah, okay. So all my previous webinar attendees are all laughing at you guys. So yeah, so now everybody's caught on. Don't draw this, don't do anything. This is ridiculous. There is no way to interpret any information from this page. And what I wanted to show you was when we see people trade and you see people putting this stuff up on the internet and you see all these indicators and everything looks like this, you start to realize that this is just too much noise. There's too much going on here. And I always say that people laugh and people say, well, you could use indicators. And I agree, but I mean, once again, look at this chart. Look at how messy it is. How can you get any information about what's happening over here? It just basically, like people are saying, it looks like a coloring book. It is. Because how do you interpret all this data? It makes no sense. So really, what you want to do is you want to keep your charts nice and simple, nice and clean, because the cleaner your display is, a lot easier it is for you to see what's happening in the market. And that is what you want to look for. And this is what I'm going to show you today. This is a simple, clean chart. You can clearly see what's happening in the market. You can look right away and you can say to yourself, okay, from a instant, I can see that we have a low, we have a high over here and the high went across. We basically had a dip, up, down, when we go through and, you take a look, we dipped, now we pulled back up. You can start to draw, another level. There's another level. So when you start to dissect your charts, you can start to see that there are things that have patterns. And as we start to go through, and I obviously, like I said, we're going to work through this a little bit more, you're going to start to see why we do what we do and how we are consistent with that. People actually started drawing. I apologize. Sorry, guys. I'm very sarcastic, and that's sort of what happens. But the first thing we're going to talk about is support and resistance lines. So our support is our bottom. our resistances at our top. You have various levels of support and resistance. You have a primary level, a secondary level, and all-time highs and lows. These are subjective. And what I mean by this is I know out of this group there will be probably 10 or 15 people that will send me a picture of their chart and say, is this the right support? Is this the right resistance? I can't answer that question. And here's where you're wasting your $450 US, because you're going to ask me these questions and I'm going to tell you I can't answer them for you. And it's not because I can't. It's because you have to understand what you're looking for. So when we turn around, and I'm going to show some examples as well, and you're going to see what I'm talking about, is when I turn around and I draw out support and resistance, it's to help me, it's to guide me. All these little things that you're going to be doing are things to guide you, to give you the right suggestions, and the right suggestions according to your trading plan. Yes, I will talk about supply and demand zones and how you chart them and how we should chart them. Yes, we will go through all that as well. So what I'm going to do is I'm going to pull up a chart because it's going to be fun to pull up charts. So surprise, here's a chart. Okay, so let us go into something. I pulled up these previously just so that I knew what I was going to talk about. Let's talk about this chart here. Okay, so right away, we're gonna talk a little bit about this chart, and I'm gonna give you some specifics. So this is our 4-hour chart, right? So each one of these candles represents 4 hours of movement. So you have 4, 8, 12, 16 hours of movement, almost a day movement. And you can see here, this is probably the end of Friday. We're on the 17th. This is the end, okay? So this is a live account. See, I have a live account, not demo. Don't ask for my balance because that is confidential. Here is some information that we want to look for. So we're saying to ourselves, okay, I want to focus in on this section over here. I want to draw support and resistance, and I want to figure out my levels. So the easiest thing to do right away when we start to draw out support and resistance is figuring out where the top is. So I'm going to take my line. So I clicked over here to grab my line, draw a horizontal line. You could also go in over here. You can also say insert if you wanted to, but I use the shortcut. And now we're going to move this line. Okay. So what I'm looking to do is I'm looking to find areas where there's a lot of traffic. And what I mean by traffic is I mean where there's a lot of touches and we have a lot of movement. So if I'm coming over here as an example and I'm drawing this, you can start to see we had a lot of movement here. It hit this zone a lot, but over here in this instance, so let me get this highlighter back out. In this instance over here, we have a lot of movement where we've tapped that area, but also over here, you see where it sort of hit that and pulled back down again. So what happened in this instance, in this specific, we'll call it resistance for the time being. I know it could be a support, it could have been a previous support level, but what we have here is price in this instance, and all in this section over here, like I said, it's subjective, so we're at 113,433. We had price hit it, reject, pull back down, and then the next candle pulled down and then went back up. So we almost tapped it here the first time. You can see this little wick almost hit it, but then the next one tapped it and pulled back down. So we had a bit of a resistance here, and what that means is price was rejected and pulled back down until we eventually broke it. Now when you look over here, the same thing happens again, right? So we came up, pulled down, pushed back up, rejected, came back down, went all the way back down, pulled up, rejected again, came back down. So you can start to see as you start to draw out a resistance line or any sort of information, you start to see where it starts to make sense. Is it better to draw support and resistance lines on the wicks or bottom of closer candles? I like to draw them on the candles because I believe wicks are more of a price testing. So that is up to you. It's your discretion. So you can say I want to draw it on the wick. So you could say in this instance here, this could be your support area in this back in this aspect, and now we have a bull candle starting, so more than likely maybe we're going to push right back up. But once again, it's really discretionary, where, if I looked at a resistance here as an example, this price point touched that resistance line. We broke through it a couple times, but it pulled back. So technically speaking, when we hit this area over here and we started to pull up into a bull trend, more than likely we were probably going to tap this area again, because look at what happened. We had this pull down, and then we had to start again and pulled, tapped it, and now we came back down. So if you were to turn around and you were to look at your lines as an example, a support and resistance in this specific area on a 4-hour, you see we have this push up, we drop right into that line, which is our support. We pull right back up again, which is into our resistance. We don't break it, similar to what we've done over here, and now we pull back down again. And finally, we break this support level to drop right back down into this range. So what you can say at that point is essentially, just erase this. We can consider this a potential new support area. Like I said, it's subjective, but if you look all the way through, and if I zoom out a bit, you can start to see where we've tapped a lot of those regions. So when you start to look and you start to highlight things, you can see this region, we had a lot of tapping in this region, we had a lot of tapping over in this region. You can start to see where your lines start to make sense. And this is why I say it's subjective, right? You're determining what you want to look for in a chart, right? So if I turned around and said, okay, I don't think this is right, Ted, you're wrong, I don't know what you're talking about, I think that the support line, the resistance line should be up here, then that's fine, right? Because you've hit a number of areas, you've tapped it. Maybe I don't believe that this is it. I believe that this one is my support area. So I believe we have a further drop to come. It's subjective, and this is what I mean by your trading plan is now you're going to trade according to your plan, where if I, as an example, drew my support level up here, as an example, I use this as my support line, and I saw that this was a bull candle, my instincts would be more than likely we may push up to this previous resistance or our previous support, which is our new resistance, where if you drew your line down over here, you would say, well, I will take this range, in this instance here, I will take this as a bigger area because I'm expecting a further drop. So my trading plan would say I want to buy till this rate here. Your trading plan would be I will wait and maybe take a sell to come down to this area. So this is where we get subjective, and this is the reason why when I say you can't trade like somebody else, because everybody sees different things. Okay. What do we look for confirmation at the support and resistance level? Do we move down to a lower time frame to see candle patterns? Yes, we will go through that, but I'm just showing you basic right now, support and resistance. So this is lesson 101. So we'll keep these up as we move forward. All right, so I will now show you my example over here. So you can see here on a daily chart for the USD CAD, you have many touches, right? So we're looking for, the more touches, the better at this point. And what you're looking for is you're looking to see where price has the most impact at a certain level. And now I have a question, but how do you avoid having million support resistance levels on a chart? Yes, correct. You look at what you're doing currently and you want to focus in on the range that you're trading for. So in this example here, we have 1, 2, 3, 4 lines. So I'm looking at a range of essentially 135.23 to 129, right? So these are levels that we're looking at. Now, once again, keep in mind, this is a daily chart. So when I mean daily is I mean that each one of these candles represents a full day of movement. So, if we're looking over here as an example and we said, okay, we think the market's going to go up again because we've tapped this support level and we're going to go up, you're not going to have one candle that's going to look like this, and it's going to top this area. You will have something similar to this, right? So we went up a bit, we couldn't quite reach this area here, we went back down, and then we finally went back up. So you have to be aware of this information, and this applies to the shorter time frames as well. And this is where a lot of people start to get confused, because they start to say, well, how come it didn't continue all the way up over here? My resistance level was 135, and now we're over at 134. Once again, it's subjective. So you have to understand your candle patterns, and you can start to see here with our candle patterns, this is a huge wick, a hammer candle, basically exhausting. And then as you start to see the next candle start, when we're talking a little ahead of ourselves, we're not breaking this previous candle over here at this point with this candle. So now we're continuing down. So more than likely, using a judgment call, if I saw this exhaustion at this point here, I know we're not going up to that point over there. For the simple reason was this gave it away. Price here was rejected very hard, and now we're going to continue down here. That is the key. And when you start to look at things, these are things I'm going to talk about as we move forward, but you can start to recognize the fact that there are hints in the market, and these are the hints that you're looking for. And this is how you become a consistent trader. Understanding that over here, as an example, this is a danger zone. There's not really any movement. We don't have anything happening here. So this is not a very good area to trade. This is what you almost have would be similar to a consolidation. So we know that we still have an uptrend, consolidating, a little bit of a push down, continuing uptrend, right? So these are things as you become a trader you start to recognize, and this is what's going to make you consistent, is understanding these little nuances and not expecting the market to continue moving up because you see bull candles, but also at the same time looking at your overall range, which is from here to here as an example, to guide you in that direction. Okay, so let me continue. All right, trend lines. Trend lines are also very important. You can see here, once again, USD CAD daily. We've done what we consider higher high, our initial trend. We're in an uptrend, okay? And these are things that you want to look for in terms of market movement. So what am I looking for in this instance? I'm looking to be able to draw a trend line that taps various regions. So we tap regions and then we get rejected, right? And once again, this is subjective. This doesn't necessarily mean, as an example here, that we've broken trend, because this anomaly, as I call it, anomaly candle, which I name my own candles, is price coming down to a point where it gets rejected, but we've got potentially premium price here. And what I mean by the word premium is that an institution has decided that they want a better price. So what they do is they hit the bottom of this area. So they drive everything down, because what are you thinking? You're thinking at this point here, it's going to bounce off the trend and going to go back up. So what do? They drive the market all the way down just to pull it back up to go up stronger again. So you have to be aware of that. So when you're drawing your support, when you're doing your stop losses and your take profits, when you start to come into this region over here, when we're close to your trend line, you should be taking profits over here. When you start to look at your overall trend, if you put your stop loss here, you're going to get stopped out, trying to go back up again, but that's okay. So what you do is now, instead of trying to choose the bottom or choose the top, you're going for safety. And this is where you become consistent. I'm going over here. Once I see that I've got confirmation that we have a candle moving up, in this daily candle, we have so much range, because you can identify essentially, if we look very closely, 132.22 and then we have basically 130,900. So you have basically almost, I would say, 300 pips to get from this single candle. So if you were to do a one-to-one, you could have a 300 pip, I would say a 300 pip risk. So this would be your stop loss over here for a 300 pip reward. So you have one-to-one. Now, if you wanted to turn around and even get it better, you could take the middle of this and then have this as your stop and this as your take profit. So you still have a one-to-one. Now, if you want to get fancy, you could have 1-2. So there's multiple ways to trade these, but what I'm saying is, as a trader, you're looking for your best selection. You're looking for an edge. Trying to call this is not an edge. That's an edge. That's a gamble. This is your edge, knowing that you have this range up here that is going to be probably the top of your trend. So you probably have all this area over here to try and make some pips. So when you dive down into your deeper charts, you're going to recognize that, you know, the shorter time frames, that there are opportunities for you to make, you know, pips at that point and profit. So now looking back here at our charts, and we're going back to our 4 hour. So if I was to turn around and draw a trend line, if I turned around and drew a trend line right through here, you can start to see where things start to make sense, right? So this is, you know, our bottom trend. If we wanted to say, okay, let's use this as our top trend. So now you start to realize, okay, we have our resistance line, our support line, So you can say this is, if we focus in on, let's just focus in on this section over here, okay? So we're going to focus in on this section. And we're going to say, okay, I want to trade this today, Ted. I don't know what I'm doing. What could possibly be happening? So I look and I say, okay, based on, and this is where we get subjective. So based on the current trend, so this was our low, based on the current trend of moving this direction, there is a potential that we will go up to this area over here, okay? So we were going to hit this section, 113.23 as an example. We're going to hit that area. Now, currently, let me just do this. We're at 112.730. So when you do the quick math, you're at like 290 pips, maybe 280, 270, 200 pips. Let's just make it easy on everybody. 200 pips. So what I know that at that point is, if I'm wrong with this area, and you know, somebody else said that, you know, we're actually at my resistance level is technically at this point here. So 909 instead of, you know, I lost 100 pips. I know that based on that information, if I turn around and I say, okay, we're back up to this is where I believe my support, my resistance line is, I will start to monitor this side of the chart, because what I see here is areas where price has been rejected once, and this is where we get into our zones, our supply and demand zones, and I'll talk about that, and our wicks, because more than likely we may tap that area because we see like a minor area over here. We may hit that area and then pull back down. So I have to be aware when I'm trading this and I'm saying we're going up to here, that there's a potential at this point over here we may have an issue. So this is part of your trading plan. This is part of doing your analysis and saying, what do I think will happen? And then what I can say to you is, okay, fine, I don't know what's going to happen, and what I'm going to do is I'm going to now go into a shorter or longer time frame to give me a better idea of what's happening. Okay, so let's go in here. So we're on a 4 hour. Let's jump into the 15. Okay, so here we are in the 15 minutes. Let's do that. So what do we see here? So compared to the 4 hour, what do we see? We see we had a little bit of a push, but now when we jump back into the 15, now we have a little bit more information, right? So once again, if we're looking, We can say, okay, this is sort of our drop point. If you want to get technical, I would use this as my support level. So we had support at 112.14, so we had support at 112.50, 557. So now we're getting a little bit more technical because we're not in that point. But what do we have here once again? We have what we consider a potential uptrend. But what now you have to dig a little bit deeper is what has the overall trend been? The overall trend has been down. So this is where you get confused and you say, okay, well, how am I going to trade this? Well, more than likely, when you start to examine your charts and you start to see where we have potential, ranges and support levels, you could start to see that there is, if you wanted to use this as your range for a smaller time frame, but if we wanted to go back up to where we were saying we were at 113.23, 113. So we were right there. I won't get it exactly because I don't want to. You can start to see where we had price tap those areas, bounce up, tap those areas, bounce back up, and then come back and touch and then break. So what do we know more than likely is if we start to analyze and go a little bit deeper, we may go up into this region and then continue further down. So now when we go back and we start to look at our 4-hour time frame, we can see that we may have that same thing because as we start to zoom out, you can start to see now we have more information. So now on that time frame, we may have a little bit more of a bounce, but we may push further down after the fact, but we're still in this area. So when you start to analyze and you start to look at what you're doing, the key thing is not necessarily saying this is where it's going to go and this is where I want it to go, but it's understanding why it's going to that region. And as you start to dive into the other time frames, you start to get a better idea. So if I turned around and turned this into a day time frame, and I'll take away these items because it's going to get really messy in a second. So if I go into the daily, now you can really start to see where we have movement, right? So right away you can start to see we had this huge uptrend and now we had a pull down, but we're not really breaking what I would consider this region over here. We haven't touched that yet. So there is room for it to further drop, maybe come into this region and then pull back up. So what I mean by that is we went up to what I would consider a top of our region, dropped back down, came through, came up again. We're still looking across. If you were to draw, actually I'll do this a little bit better. If I was to turn around and I was drawing my resistance out, you can see where we've tapped it on the daily multiple times. So we've tapped in this region, tapped over here, we've tapped over here. So more than likely, we may be coming back down to this region, similar to how we've done that over here and over here, just to pull back up again. So like I said, this is subjective, but it's understanding what the movements are happening and where the candles are going. This is amazing. So much information. Great. One less complaint to deal with later. Okay. So jumping back over. So now we can start to see in our charts here when we're moving through and we start to see, you can see where we had the top of that range. We had the top of the range, we moved to the bottom, so we created what we call a lower high, right? Because this lower low, and this was a lower high because we're in an upwards bull trend. This is a higher high, but this is a higher high because number 3 is higher than number 1, right? So when you start to look at the prices, we're at 135 here, we're number 1, we're at 131. So we've created a higher high. So when people talk about an uptrend or a bull trend, they're talking about higher highs and higher lows. So this is, a higher low because this was the lowest low. So this is our higher low, and then this is a higher low. So you've probably, as a trader, or if you've done anything in terms of research or watched videos, everybody talks about this. So once again, I'm not reinventing the wheel. I am not telling you something that is earth-shattering or something that's going to make you a superstar trader. What I'm trying to do is I'm trying to put it together for you so you understand how these things relate. But once again, it's a subjective judgment call. It's understanding that if price moves a certain way, these are the regions more than likely they're going to hit because of human psychology, right? You can see right away we have patterns here where prices hit multiple times on a certain trend line. It's just psychological. It's the markets have priced that in. So when people say the markets are predictable, this is what we're talking about. There's a higher probability that we're going to move to that section, but it's not definite. So if you can take a piece of that range, you're going to be a successful trader consistently. Okay, but in the end, if you have mixed signals to buy and sell, do you just compare the amount of signals you see in buy and sell? No, I don't do that. I don't take a trade. How many taps until a breakout? Nobody knows that for sure, but it's the idea of you probably see it in terms of timing when we see a breakout. It seems as though you always have an equal amount of contradicting variables once you jump between time frames. I guess it would make sense to trade on a single time frame and not trade multiple time frames. Correct. You're using your larger time frames for the overall trend, so you know that you're not trading against the trend. So if there's a downtrend and you're taking a buy position, you have to be careful, but more than likely you want to do analysis where you're trading with the trend. Much information, writing all this down. Is it normal that I feel confused a bit? Yes. Um, you will feel confused. We will get you unconfused. Ted, a lot in Instagram, members of the Forex family say the wicks don't lie. What does this mean? Haha, we'll go through that. Would you wait until you tap the support to get a consolidation candle before you make a trade? Depends on where I am in that range. You make this sound so really easy. Okay, so we have contradictions even in the group. People understand, some people are confused. So this is trading. So I'm glad we're doing that. Okay, so let's move on. And here we go, wicks don't lie. So this is something that I made up myself because I like to have fun with trading. And when you're bored with your life, you make up stuff. This is Shakira, so her hips don't lie, so we always say the wicks don't lie. And I thought that this would be a very good way of understanding wicks and price rejection, which is similar to supply and demand zones. But I mean, we don't use those terminologies. So when you hear us talk in groups, and you'll see us a lot in chats, I don't use a lot of those terms. I found a lot about this. Like I call it like caveman trading because I read a lot of books, but I'm one who likes to break things and fix them. So I didn't really read stuff. And I think if I had read like supply and demand zone or talking about price rejection, I would have figured this out a lot faster than what I did when I actually understood it. It was just more of watching the patterns on the charts and coming to my own conclusions. So when I said wicks don't lie, this is what I'm talking about. So this is basically, Shakira, the trader, who's going to help us determine what wicks are. Okay, there's one question here. You consider a price or an area level for support and resistance? You consider price an area or a level of trading? It is always going to be subjective, and I'm going to show you why this is what we're doing here. Okay. Can I say this is one pattern what you focus on? Yes, I do focus on this pattern, and I will show this. Injecting humor to stop crippling depression of information overload. Yes, I try that. Once it hits support and resistance zone, should we wait to see which way the wicks travel before placing the trade? Yes. Do you find it is important? Do you think it's better to find support and resistance with line charts? You could use those. Yes, she is a good trader. Since you brought up support and resistance, what's the primary, secondary, and all time levels, highs and lows? Can you give an example? Yes, I can. When I'm drawing the dividing line above a candle, it is confusing. Okay. you consider a price or an area of level support and resistance, you consider price or area of support and resistance. It's an area. It's always going to be subjective. You can never hit it on the head. Okay, so here we go. We're gonna capture all that information all in this next section, and it's going to come apparent to you. Okay, so what do we see here? Clearly, it is a upward or a bull trend. Okay, so can everyone see that there's a bull trend here? Okay, so we're figuring out this is a bull trend. Okay, good. So we got people answering yes. And I will show you why this is a bull trend, okay? Bull trend. Okay, so very quickly, with your eyes, you have to start figuring this out. You have to be able to spot these with your eyes. You know, so you can look right away. So more than likely, we're going that direction. Okay, you have to really study this, and this is where I say time in front of the charts will always conquer or always be greater than trying to trade, trying to read. It's just sitting there, and a game I used to play with myself when I started trading was, which way is the market going to go? And I would put a guess in. I would say, okay, in this chart as an example, I would say, I think the market's going to go over here. So I would wait to see. I would come back an hour later, maybe the market's here, maybe it's over here. But then I would ask, well, if it didn't go the direction I wanted it to go, why did it go this way? What happened over in this region for it to change? And that's how I started to become a more consistent trader, because I started to recognize, oh shit, there's some like trend line here. So maybe it had to bounce off the trend first and then go up, right? So I was answering my own questions by doing my own homework and doing my own detective work, but I was playing a game, so it kept me interested. Bull is up. Bull is always going to be up. Okay? So bull means up, bear means down. So when it's a bull trend, it's an upwards trend. A bear trend is a downwards trend. So this is bull. So we're creating higher highs and higher lows. What time frame does the FX market follow? It's GMT time. You have to check your broker. Okay, so here's exactly what I just said. So you can see now as we expand to the higher time frame, we can follow a stronger overall pattern for the trades. So, you know, you notice the size of the trends and actually the range, you can make judgments on new movements, right? So we're looking over here as an example, and this is what we're looking for. So I've drawn out what we're seeing. So we have basically wicks have tapped here, pulled back down. We have wicks that have tapped but pulled back up. But then, so once again, the wick has come all the way down, tapped this area, pulled back up. Wick has come down, tapped that area, but you can see right away we're creating higher lows. So these are where we say wicks don't lie, because this wick is lower than this wick. So the wicks don't lie. So if I see that this wick and this wick are moving, more than likely the next wicks will be up over here. And what do we have? Continuation. So that is what we're looking for when we say the wicks don't lie. So when you look over here as an example, and as we start to go through, wick, 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 wick. Wicks don't lie. So if I took a buy over on this trend line right here, my wicks are telling me as long as this wick here doesn't close over here, we should still be going up, right? Because as we start to go through, we get to this point over here where the top wick comes. Now look what's happened. This wick is now pulled back down. But what gave us that information? And more than likely that was going to happen? We had this indecision candle, but more than likely we had this support level, or sorry, this resistance level. And when we came down over here, we had a resistance level which matched up with this one, or sorry, support level, which matches up with that one. And as we come back down, you can start to see where things start to match up with previous levels. So when you see wicks, more than likely that's what you're looking for. You're looking to see how the pattern's moving, but the overall. This wick, once again, came close to our trend line, but it didn't actually tap it, but more than likely it came down, it would push right back up because we're following the trends. We have trend lines. So you have to be aware, and like I said, it's very subjective at that point. All right. Could you re-explain how low the wicks are allowed to go? Wicks are allowed to go to various ranges, but what I'm saying is when you draw your trend lines, you might find that they tap that region and pull back up. There's no exact science. And this is what I'm trying to say, and this is the one thing that I'm going to tell you all the time is you can't solve Forex. There's not a mathematical equation that would say if I do X plus Y, I'm going to get Z. These are judgment calls, and that's what I'm showing you here. These are judgment calls. With all the information that we have here, you can clearly see this wick dropped, but this wick was higher than this previous one. So when we start to do that and you draw your trend line, right? As you draw your trend line out, if we know that this wick doesn't break this trend line, more than likely we're going up. If it breaks that trend line, we're going down. So same thing here. We broke this trend line with this wick. Now we're going down. Sorry, not that wick, the next one beside it. This wick over here. We broke that trend line, right? Because this was your highest wick, your higher low. This candle, when it started forming, started pushing down, broke that area, came over here. Now we're down. When we hit this area over here, we stopped, then we started back up again because the wick started coming back up. But when we tapped this area over here, similar to what we tapped over here, we moved back down again. Now remember, these are 4-hour candles, so this is a lot of movement to see, but it's easier to show in a larger time frame. In the shorter time frame, you would be doing this. You'd have a lot of bounces like this, and it would be doing like that. But here, this is a little bit easier just to explain for what's going on at this point. Okay, do a lot of people buy off the wicks? It's dependent on your trading plan and what you feel comfortable doing with the trends. Do you buy in a bull trend and sell in a bear trend? Yes, you do. Do the wick theory work on lower time frames? Yes, they do, but they move faster, so your range of pips aren't going to be as great, so you have to be very quick. How about the long bearish wicks in the middle of the bull momentum in the center of the screen? Okay. Yes, the candle is still bull. Yes, it finished higher than the next one, right? So when you look, if you drew your trend line over here, you're still finishing higher than this wick. That's your key. It's where your candle's finishing to give you that information. Do you ever sell in a bull trend? If you want to do a quick correction, you can. Okay. How can you tell the difference between the market retracing and the market reversing trend? You have to look at your bigger candles, or sorry, your bigger time frames. And when you start hitting major resistance and major support in your bigger time frames, more than likely a reversal starting at that point. How did you draw the trend? How did you draw the two trend line not above the candle? I was going off the wicks to give you information on what's going on at that point. So are we more concerned with the wick rather than the box? You're more concerned with where the price region is going to tap. The wicks probably give you the best idea of where it's going to get rejected. So when you're looking at wicks, if it rejects that area, more than likely we're not going to get to that level again. So basically on support and resistance, we have to see the wicks and if they're forming higher wicks or lower wicks. Not necessarily. These are just subjective examples. It's basically you're looking at where your candles are going and where we're getting that information of rejection. So do you buy or sell when the pattern is going up? You should buy if we're going up. So Ted, if the wicks break one of the three lines, it's a start of a reversal trend, correct? Depends on what time frame you're on. Usually on the higher time frames, it would be. On the shorter time frames, it'd just be a minor retracement. Yes, wicks on 1 minute are too crazy. Is it fair to say that when a candle closes and breaks the trend line, it will more likely that trend will turn around? Once again, these are subjective questions. You have to evaluate based on multiple time frames. Wick percentages. I mean, there's not really necessarily wick percentages. It's more of you know, what's going on in that at that point. What do you mean by quick correction? I mean, in the shorter time frames, there might be a pullback to get a continuation. The price needs to always have energy to move. You can't keep going up and up and up and up and up without with a continuous movement. You have to pull back a bit. So that's where you get that minor correction. Please talk about your entries. Sorry, you guys are asking so many questions. When you get a reversal signal, do you have a tendency of closing the trade or waiting for it to retest or bounce? It depends on my trading plan and where am I moving at that point. Okay, you guys are asking a lot of subjective questions that aren't going to be able to be answered in this instance. You have to work on that. Would you enter the trade based on the 4-hour chart, or would you revert to a lower time frame for entry point? Yes, I did say that. You work on the 4-hour time frame to see the overall trend, and then you use your shorter time frames for execution. Can you explain how to identify wicks that are gathering momentum? Sure, you can see where they're gathering momentum. In this instance right here, we had a pull down to the trend line, we had a pull down again, and now we had a huge candle push up. So that's where you would see momentum. Like I said, these are shorter time frames or longer time frames, so you don't see it as exact. I'll go into the shorter time frames in a second. Please talk about your entries and stops on trend lines. Well, I would take an entry over here or over here, and then my stop would be below that. That's what I'd be looking for at that point. So we are looking for the body of the candle where it could touch support and resistance and more likely continue in that direction. Well, it's not, it's going to continue in that direction. It's understanding that we're entering a region of price that there could be action happening at that point. When you have a reversal, okay, we answered that. Would you not trade that kangaroo tail pin bar on the 24th? Move back down. 24th. This one. Well, I mean, once again, this is a 4-hour, so you have that kangaroo tail. It basically tapped and pulled all the way down. So when we talk about zones, more than likely that zone is going to get filled. So this range over here will probably get completed, and it did. When you see what happens over here. Would you then determine Fibonacci to take profit? I don't know. It's up to you if you want to determine that. Yes, I will talk about zones in a second. You guys are asking a lot of subjective questions. Yes, we check the news before entering a trade. I will go through all of this. Yes, we will talk about all these questions. Everything that you just asked, we will be talking about. Trust me, technical analysis is just not one of these things, okay, guys? Like, I will go through everything. Let me go through the entire section and then ask me questions. Trust me, I know exactly what you guys are asking. I didn't start trading yesterday. I know everyone thinks I did because my charts look ridiculous, but I didn't. I actually started trading like Friday. So I took Saturday off. I started on Friday, and then today on Sunday I'm doing a webinar, and you guys all signed up. So let's work slowly through this. There's a progression because everything will not make sense if I jump around and answer all these questions because you guys are jumping ahead, back and forth, and it's not going to help anybody because at the end of the day, there's a logical progression behind this. I didn't make millions by jumping around charts. Yes, refer 3 friends later. No problem. Just patience, guys. I know you guys all want to trade because the market's open in a few hours and you all want to trade Sunday night. It's not going to happen. Let's just take our time. All right. What about the shorter time frames? So here's all the questions about the shorter time frames, and everybody was saying, "Oh, what do I got to do in the shorter time frames?" So now we moved into the 5-minute time frame. Okay, so once again, it's understanding wicks and making judgment calls are the keys to trading profitable, and that's what I've been trying to say this whole entire time. So you can see there's numerous trends, but the range is only about 20 pips. So if you're talking about mini pips, 20 mini pips or 2 standard pips. And it's due to the time frame that you're in. This is more of a scalping opportunity. So you're going to get in and out really quick. You don't want to try and catch the entire move, but you want to catch just a piece of it. And the thing is too, you have to remember your spreads and your commissions. So maybe catching 20 pips is not profitable. Your spread is too high or your commission's too much. So this is where I'm saying, when we dive into the smaller time frames, you can start to see where we're getting a lot of information. So once again, when I look at this, you see exactly what's happening. So the first thing I've done is I've identified, my major, I would say, support and resistance, right? So this is my major resistance. I have my support areas over here, and I've highlighted this area here. I've highlighted as the range of what my support area would be. This I've highlighted as my range of what resistance would be, because it doesn't necessarily fall into that, right? Because if you look in certain candles here, if you turn around and you look at this candle, right? Or you look at this candle, it's still in that range. It's still in that area. It hit it and pulled back. If you look at this candle, it hit it and pulled back. These candles over here, right? We tapped that area and we pulled back. Okay, so these are the reasons why you're looking at stuff like that. But more importantly, in the shorter time frames, the wicks are more prominent, right? So here is an example. We have a downward trend because each wick is getting lower lows, right? So this wick we started up in this trend over here, and we started pulling all the way down. And now we're moving. We get to this area over here, which almost touches our support zone, which is our support and resistance lines, but then shoots all the way back up. But then once again, we come up here, we come out a bit of the support and resistance area. Okay, so we come out a bit of our resistance zone. So, if you said this was my resistance line, I popped up over here. That doesn't mean that we're taking a buy. Okay? That doesn't mean we're taking a buy, because look, the next candles, we're dropping right back into that region between here and here. So you have to be aware, and this is why I say candle patterns are important, because what happens with the next candle pattern? So you have the top of this wick. This wick is now lower than that previous wick here. And you can start to see all the wicks start to go lower each time, creating this downward trend. So this is where I say confirmation is important, and confirmation is subjective. And what I mean by confirmation is subjective is I mean maybe you wait one candle because you're a superstar. Maybe you wait 2 candles because you're not confident. Maybe you wait 3 candles because you're a pansy. Maybe you wait 4 candles because you're just going to wait for the rest of your life. 5, 6, 7. Maybe you take a candle over here and you ride it all the way down. So there are multiple instances in this case where you can choose your confirmation. You can say, I want confirmation here, I want confirmation there, I want 1 candle confirmation, I want 2 candles confirmation. It's what your comfort level is based on your risk management, based on your trading plan, and based on what you're trying to do with these trades. So when people ask me, so Ted, is this a good time to get into a trade? I will tell you it depends, because what are you trying to accomplish? And as a trader, write this down on your piece of paper, get a tattoo tonight on your body. You have to say to yourself, what is my end result? What am I trying to do with this trade? Before you even look at charts in the morning or in the afternoon or the evening or whenever you're trading, you're going to say to yourself, what am I looking to accomplish with my trade? Am I looking for 5 pips? Am I looking for 100 pips? Am I looking for 1,000 pips? And with that being said, those are going to be the keys to your success at that point. Okay, so there you go. So that's some information. We got some stuff clarified over here. Now we will carry on. So let's test your knowledge. Oh, look at this. Yay! We're going to do a test. Okay, so this is I spelled that wrong. I'm such an ass. This is the pound USD time frame. What's next? Take a guess. what do we think is next? So look at the chart. It doesn't really say much, but looking at the current wicks and looking at the patterns, what do we think we see? So you can type it in, you can write it down, you can do whatever you need to do. You can say it to me. Okay, so here we go. Oh, we got buys and sells. So someone's right and someone's wrong. Okay. All right. Okay. Okay. Don't. Okay. Yeah. 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 Okay. Yeah. Great. Great. Yeah. Okay. You guys. I'm not reading all the answers. I just wanted you to. Let's do this rhetorical next time because now my question box is loaded up with buys and sells and people laughing. Like it's not going to happen. We're not going to get anywhere today doing this. Okay. So there you go. This is why these webinars are recorded. Because of the fact that they're 9 hours, and this is the reason why it's 9 hours. And someone said wait for confirmation. Okay. So there you go. So what I did here was I dissected the trade. Okay. So the first things I did first was I drew what I would consider a range. Not necessarily a range, but I drew it like where the wicks exhausted. So wicks exhausted. See that? Exhausted. So what am I getting at that point? We're now starting to see a pull up, but this is where we had this pull down. So right away you can see in an instance we come down to this area over here, but more than likely this is probably going to be your support, and more than likely this is going to be your resistance. Why? These candles over here, those are anomaly candles, and once again I use those words loosely when I say anomaly, because look what happens. Right away, we go back up. So this is probably just a price grab. And what I mean by a price grab is I mean that, TD or Chase Manhattan decided I want a better price to go further up. So they drove it down to get this price here to go back up. So, if you turned around and you took a price, you took a buy at like this, or you took a buy over here, that's not a bad thing. Like it's not the end of the world as long as you have your stops in place, and you would figure out where you want to place your stops. Or if you get stopped out over here, you take another entry over here and you could ride it back up. That's okay as well. So like, once again, it's subjective. Waiting for confirmation. You hit this point over here where it starts to pull back. If it pulls back here, more than likely you could say, okay, fine, we've reached this area because I was looking at my support level. We went really through the support level, but now it's pulling right back up again. So I'm going to take a buy in this candle, but what happens is the candle drops a little bit here and then it proceeds to go up. So you know what? You put your stop over here and say if this candle wick closes below this candle over here, so once again, if we get to this point where I draw this wick and this wick drops below here, that means we're probably going down still, right? Based on what we've just been discussing. But because the wick doesn't fill this wick, or sorry, doesn't finish to that bottom wick, more than likely we're going to continue in this upward trend. So these are judgment calls. So this is a judgment call. An experienced trader would recognize that. A new trader may wait for this candle because look, the wick is now higher than the previous one. A more experienced trader may wait for it to drop back down and then grab up over here, right? But you can see overall when you pull down, we're still on an upward trend. So even if you bought over here and you're like, oh shit, I got stuck and now it's going down, and as long as it doesn't break this wick over here, which it doesn't, more than likely we're going to go up, and hey, you're still profitable because you went from over here to up to over here. You just had a little bit more of a, like a little bit of a challenge there at that point. Does it matter the time frame? No, it doesn't. Just the higher time frames take longer to develop. If the bullish wick candle closed below the bearish wick, is it most likely going to drop lower? That would be impossible. You can't have a bullish candle drop below that. More than likely, it wouldn't happen. Which side of the wick should we see? The last three candles, there's wicks above the candles. Yes, but you're in an upward trend, so you have to recognize that trend at that point. So what you're looking for here is, yeah, so you see like these candles are up over there, but we're still pushing. You're still in an upward trend. So we're still moving up. It doesn't necessarily, it just means where price is rejected, we're still in an upward trend. It doesn't necessarily mean the top here. This top section would matter more for what you're looking for in terms of your take profit at that point, because we're in an upward trend. So if we close below the green line, it would most likely go down. In theory, yes. If that's what I was banking on from a risk management standpoint, I would close at that point. Okay. So let's carry on. And so there you go. So guess what showed up next? So now you're never going to hit the top of your bottom of your range. But what you can see is in most instances, you see complete pattern. So it went down and then all the way back up. So remember from our previous point where we had this candle right over here. So everyone focus on this candle here and this candle over here. Okay. So when we see what we've done, looking at where our resistance line is, and when you look at the next slide once again, so we've focused on those two candles. So we had our candle here and this candle here. Look what happened. We hit this top and then we started to pull back down. But we still were in that trend. But what I'm saying is more than likely we're going to come to that area. So if you were to turn around and say, okay, I'm going to take a buy over here or a buy over here, and I'm aiming for this section over here, if I was looking at this range, if I took a take profit point here, more than likely you would probably hit it just because of what's happened in this instance. Now, once again, this is subjective. This is not something that will happen constantly, but based on market pattern, based on sort of structure, this is what you're looking for. You're looking for these quick hits, and this is the idea behind when you're looking at wicks. So what are we looking at for wicks? So you're looking at exhaustion of candles either near support or resistance area. It allows us to evaluate if the trend will continue or switch. Bigger wicks represent more power in the move. So, when you have a big wick push up and then pull down, chances are we're going to be moving in that direction. Don't guess. If you're not sure, it's not a trade. And the longer time frames, the longer the time frame, the more development of the wick will take place. So you know what? When you're looking at like a 4-hour candle, it may pull back for a while before it starts to move up. And that will form your wick. So when we go back into the magic of television here and we go into our daily range, this as an example here, that took a whole day. So for the whole day, it dropped into this area, pulled all the way back up. So knowing that, and knowing that we went from this over here, came up over here, more than likely this candle is now going to be a bull candle up to this region. So you see how this is USD JPY, and we were talking about the pound US dollar, but you see how that dropped and then came back up into this area again? So if you turned around and you said, okay, Ted, I don't believe a word you ever say because you just talk a lot of shit and I don't know the future. If I waited for this one and I said that this is going to be my resistance area and we went all the way down here and I said that this candle was the power and then this is my confirmation candle, more than likely I can take a buy in this position here. So this one right here, ride it up for a bit, potentially to this area. And look, surprise, we hit the same port again, okay? We had a little bit of trouble because it dropped back down, but it didn't drop back down to this level here or to this one over here, right? So once again, when you look and you say, okay, fine, we started here, I'm taking a sell all the way down to here, it tapped this area, and now we're going back up again. Oh, it exhausted. But this exhaustion, it didn't break. It kept going up. Now, when you look over here, this exhaustion here and here, it didn't break again. And so when we zoom in, which I should have done before, sorry. Give me a second. Okay, so here we go. So we've zoomed in, And what we're looking at, once again, is we're looking at this magic here, right? So we're saying, okay, Ted, you told us if it goes up over here and it taps this area, see lots of power with this candle here, it's going to drop back down. And I say, yes, probably it is. And then it drops back down a little bit more because it's going to go to this area over here. See, we've got like a little bit of region here, a little bit of region here. Okay, so it's tapped this region here a couple of times. So we've got like these two tapping things here, and then we have this one wick where an institution or some big money decided to move, and what we did was we basically turned around and it pulled back into this region, which was over here. Okay, pulled all the way back up. So this took a whole day, and then we said, okay, I'm going to take a buy on this trade. I took a buy. Is it going to get to this level again? So you can see we're always in that little area again. Are we going to get to that area again? So if I took a buy, I would take a buy, fill this candle, pulls back down. Uh-oh, I got problems. I'm still in profit. So this is, this is your profit. You still have profit. This could have been your biggest profit. You pull down. Now you determine how big of a trade you want to do. I would turn around and do that, right up here. Now when this starts to happen here, I can exit in any region over here because now this is a huge bear candle and I don't know the future that it's going to actually go up that way. So I'm happy taking that trade. Now, when you look and you see the indecision candle, you can say, hey, look, this candle's happening. This one's happening again. This wick over here is, higher than these wicks over here. So more than likely we're going to go up. And as soon as we pass it, now we're touching this area, and I can say, okay, we tapped this. I don't want to be part of this trade anymore. I'm out. If you're adventurous, you would have rode it all the way up here, tapped that, and you could have said, okay, well, how do I know it's going to go to that area? Because what you would have done is you could have easily said, hey, look, if I'm looking at ranges, I could say, look, that one. So for me to be safe, if I looked across if I looked across the charts, I'd be looking at this because it broke this. So where do I think it's going to go? More than likely over here. Is it going to go to here? Probably not, but there's probably a high probability it's going to be in this area here. So maybe I would take I close my position at that point over here at this to say that that makes the most sense at that point. And then sure enough, when you go through and you start to look, you see, and now we have that drop all the way back down. So more than likely, maybe we're coming to this level again. But this is the reason why the patterns are just always doing the same thing. It's understanding where you want to be in your trade and executing accordingly. That is the most important part when you're looking at stuff like this. Bullish engulfing on February 25th. February 20th. Sure, that makes sense. Why didn't it cover the range of the wick? I don't know. Just did what it did. It's subjective. We don't know why the market does what it does. We can only understand what we hope it can do in terms of our trading. That is the most important thing. Excuse me. Okay. All right, so here are samples to help reinforce the point because Uncle Ted, I still don't understand what you're talking about. See, you guys think that this is all just fugazi, like I just come and talk out of my ass. I have all this stuff for you guys because I want you to succeed, and I've already answered all these questions thousands of times before. So that's why everything sort of works in what I consider a progressive format. So here we go. So we have USD CAD weekly, okay? So once again, the focus here is essentially the range over here and over here, right? Because this is where most of the action is happening, this section over here. This, like I said, WTF, this doesn't exist over here or over here. So when you're looking at charts and you see stuff like this, that is not an indication of stuff that's going to help you. that is stuff that happened that we don't know why it happened, how it happened. There could have been news events. There's information there, but it doesn't match up with the overall, I would say, as Rakil calls it, the cosmetics of the charts. This is just anomaly. So we have a messy trend line, but we're still moving up overall because, as you can see here, all the way up, we have lower lows and higher highs, or lower highs and higher highs. Okay. Oh, now everyone thinks this is so easy. See, this is what happens when I give you cheat codes. Everyone thinks this is super easy. See, that's not. I told you it's going to be hard. You're going to cry afterwards when you realize it's not as easy as you think. It's just easy because you're seeing the end. All these questions you're asking me, I will give you answers to. Please do not ask me questions. Let's learn this. Okay. So here we go. So now we're going to dig deeper into the 15-minute time frame. So as I've stated, the trend is your friend. So USD CAD would have been a buy position the entire day. Okay, so we looked at the higher time, we looked at the daily time frame from that previous chart. And when you're doing analysis, you have to anticipate the move and understand the wicks. Okay. And once again here, people ask me these questions. They say, but Uncle Ted, the dumb wicks on a bear candle, right? Because that's what everyone's saying. Look at these dumb wicks on a bear candle. But here's the thing. Look at the minor wicks and look at these levels that we're creating, right? So we have an overall uptrend, but we have levels, right? So it goes here, 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 right? So as you start to draw out, your minor zones, we still have an upward push. So it's important that you look at everything holistically. And when I say don't trade off your phone, because you can't see this stuff on your phone, you won't be able to look at it as clearly on your phone as you do right here on a chart and on your desktop or your laptop, because you're able to see more information. So we're looking from the 17th of November all the way to the 18th, but in a 15-minute time frame. So you can clearly see we had an upward trend. We bounced around. We had a support level near the bottom, but we kept pushing all the way up. And these are the keys to your success, is these wicks always constantly pushing up to the next level for you, and I've highlighted them here. All right, so let's dig a little deeper because, once again, people don't believe what's happening, so now we're going to go even further. So, once again, when looking at wicks, you have to figure out where you are in the trend or the move. So you can see I've drawn mini support and mini resistance levels to give you an idea of what's happening. And what I've done is I've highlighted some key zones where we pushed up and we broke the zone the first time, right? So if you look closely, once again, here is like our lowest support for the 15-minute time frame, okay? So you see we had a little bit of touches. We almost had a touch there, but then it continued on, but we never had a touch again in this zone. So this would be your lowest support area. And this is something you can mark out all the time when you're working on your charts, but more than likely we went all the way up, we tapped, went back down. So I'm taking, at this point, if we drop here, providing we don't go into this region here and we don't break this support level, I'm taking a buy, because more than likely now the trend is starting to move in that direction. Oops, I jumped further ahead, wrong button. So that's your key. So when people are asking me where do I put my stops and where do I put my take profits, I'm looking to make sure we don't break those areas where, right here, this is our lowest point. If we break that, more than likely we're going back down again, but we never do. We continue to create a higher low, and you can see as we start to move all the way up, that's exactly what we're doing. So once again, another key point is trade what you see, not what you think. So remember, support are ranges, traffic moves through. In most instances, they will stay in those ranges. So now couple this with the USD gaining strength. In this instance, I know a lot about USD CAD. So there's a minor fundamental piece in there, and that's what I'm saying is you'll learn about that and you'll start to study that, and I'll give you resources to study there. So don't ask me where to get this information. It's all in the Google Drive. We have that. You have to be able to make these judgment calls, right? So right away here, it's a perfect example. So we saw what was happening. This is a USD CAD 1 hour chart. We have this range over here, and now we're pulling right back up. But we come to this bottom point, but as we start to move, this wick is now higher than that previous wick. This wick is higher than that wick. But more importantly, this wick comes into this zone again that this previous wick did. So these are little points, and these are the things that you have to be mindful of when you're trading and when you're analyzing charts, are these tiny little nuances, because the more detailed you are in your charts, the easier it's going to be for you to trade, because of the fact that you're looking for little things. You're a detective. You have to map out the crime scene. This is your crime scene. This chart, you have to figure out what's going on and why it happened. The more times you ask why and the more ways you're able to solve why, the easier trading is going to become for you. Yes, okay, so the second tap on that support, the bearish candle went further down. Yes, it did. So we would pull out of the trade, but what I'm saying is, where would we enter afterwards to see where that's going? And plus, timing was an issue at this point. Okay, you guys are asking me questions once again. Day trades, or you carry overnight? These are day right now. Where can we go to find news? I will tell you all that. Please, one at a time. We're doing technical analysis right now. Technical analysis is just analysis of charts. There is no fundamentals here. Fundamentals is news. This is technical. Technical is just trade what you see, not what's going on in the world. There could be a nuclear war going on. You're still trading. You're looking at the charts. That's all you're doing. All right. So here you go, putting it all together. So see, once again, you guys jump and ask me these questions, and surprise, I have the answers for you. So this is now your 4-hour chart. So we went from the 1 hour to the 4-hour, and you can see exactly what happened. So the question earlier was, well, you know, that went further down, blah, blah, blah. It did something. Here you go. Here's all the information. So looking at item number 1, and you guys are going to get used to all these charts because this is how I draw out my charts. Item number 1, patience. Wait for it to hit support. The candles will tell you where to go. See, this is noise. So this lower region, which is lower than these two regions, it didn't sustain. These are just price movements going into a lower impact zone. We're okay. We don't have to take buys here. This is the magic of the wicks, right? So you see the next candle closes bull formation, right? So when you see what happens here, bull, and then the tiny wick is your key. So that tiny wick starts the trend to go up in the space, because here is not as low as here, which is noise we've discussed, but here matches up over here and over here. So you start to recognize zones as regions where price tap, and that starts to propel it up in here. So we have a zone here, we had a zone here, pushed all the way down. Zone here, pushed all the way down. Zone here, pushed all the way down. It doesn't happen all the time, but in most instances it does. So you just have to be aware of that. Sometimes here, look, you can say, oh, well, Ted, you're wrong because it's zone here and then it went back up. Right, that can happen. But what happens here is now we go further down. So this is probably accumulation in terms of, you know, getting a, I would say, consolidation, and then we would move further down. Based on the times, 16 GMT is 9 a.m. So you know what? We went ready for the market, and the market started to push all the way through. So these are little tricks that you're going to learn and that you start to focus on, and we have a lot of documentation on this. So if you don't understand it right now, it's okay. We can review this again. I have other webinars that talk about this, but these are sort of your bread and butter points of how you're going to analyze your charts on a daily basis. Okay, how far back in time do you consider relevant? 20 days. Yes, there's head and shoulder patterns, there's tweezer tops, there's M's, W's. I don't go through any of that stuff. That's not important to me. I don't care about those things. Those are, however you want to define those patterns, I look at it as the candle going up or is the candle going down. How is it doing? Why is it doing that? That's all you're doing at that point. So you're making decisions based off of past patterns and the wicks. As in the wicks touch the resistance line, they tend to believe it go up again. More than likely, yes, because it's going to fill that range. There was a downtrend, yes, but we saw that it went up again afterwards. And once again, these are trades that are taken just for a certain time frame. This is not an overall trend. All right, next one is zones. Yay, zones. All right, so zones. Everybody wants to learn about zones. These are supply and demand zones. And these are things that what you're looking at in terms of how things are going to react to certain prices. So what I mean by that is where price hits a certain point, gets rejected, and pulls to the next area. Okay? So like I said, simply put, these are your supply and demand zones. There are tons of videos on YouTube. Go and watch them if you want. We have a book in the Google Drive called We Don't Need No Stinking Indicators. It's like 36 pages. Quick read. It will give you information regarding this as well. And exactly what I said. Essentially, zones are where price pushes hard in one direction for a single candle, then pulls away in an opposite direction. Okay? And that basically sets up your move. Would you enter at the close of a candle short reporting resistance? It's all subjective. I can't answer when I would enter. You can't answer those questions. Guys, don't ask me any more questions on entries and exits because we don't have a trading plan yet. You have to build your trading plan first, then we talk about entries and exits, because I can tell you I would enter everywhere. And how does that help you as a trader? It doesn't, because your trading plan is different than mine. So what I'm trying to say is when we do this and you guys keep asking the same questions, there is the system. Let me go through the entire system. Finish the whole entire webinar. When you guys have questions, we will go through them again, okay? I can't repeat that enough. You guys keep asking questions that are jumping topics. Doesn't make sense. All right, so here's an example of our zones, okay? So once again, we look at this and, you know, we can say right now this is a relatively current zone. This is from this last week. This is what I'm focused on. This is what I'm focused on. Okay, so you can see it's not the greatest picture, and I'll go into an actual chart in a second, but you can see where we tapped into this region. This is a region, and we pulled all the way up. We tapped into a region, pulled all the way down, tapped into a region, and right away we pulled all the way up, tapped back into that region again, okay? So when we go and look at a specific chart, which I will bring up now on MT4, let's go into our quick 5-minute charts, okay? So here we go. What's a good thing to look at? All right, perfect. Look at this. All right, so here we go. So I'm going to do this, and I'm going to do this. Yeah, let's do that. All right. So here we go. So I went into an editor to give you a better idea of what I want to look at, okay? So let's go down over here. Let's do that. Let's do this. Okay. So let's just focus on this area a bit, because I want you to understand the concept of what's going on in these situations. Okay. So once again, these are zones that I've identified. They don't necessarily mean anything right now. So don't ask me, how did you know that was a zone, or how do you know, excuse me, that wasn't a zone, or can't this be a zone, or can't that be a zone? It's not. It's subjective, and I'm doing this on the fly so that you can get an idea of how I analyze things and what I'm looking at. Okay, so with a zone, I'm looking at what I would consider the biggest areas. Okay, so when you look at stuff like that, you're looking at sort of the biggest wicks, right? So this is a perfect example of a huge wick, right? So you know, if you looked in over here, we have like a huge wick. This software is also available in the Google Drive, so you can use it. It's free. I, I got it from a special place called the internet, so you can borrow it. But what I'm trying to say is when we have these zones, what we start to see is we start to see essentially a tap into this region, right? So we've tapped, we've tapped. The wicks also help you because now this wick is higher than this wick, right? So you start to understand what's happening with wicks, but more importantly, zones, right? So we knew that this zone touched this one over here, but what happens is we get this huge pull up to this area, right? So we're back up into that zone. So, once again, this is a 5-minute chart. So this is going to move fast. So this is 5, 10, 15, 20, 25, 30. This is like a half an hour of movement, right? So we've moved up. But what I'm looking at is we have this zone over here. So if I turned around and I extended that zone, because that's sort of what I would do, is I would look for all this area over here, right? So I don't know that this exists yet. This doesn't exist yet. So none of this exists. This is future because all I'm focused on is this area over here to say it's going to go up. But because we had such a big movement there to push down, more than likely we're going to come back up to that zone there. And this is 5-minute movement. So this is not a lot of space, but it's enough to get you understanding how those areas get filled and how those ranges get filled. So now what I'm looking for is this key area here, which matches up with over here. Because what this is this is your consolidation now. So when you look at consolidation candles, these are your consolidation candles. See, they're not really going up, they're not really going down. But my trend is up. So more than likely, this consolidation is going to get me up into this zone again. More than likely. It's not 100% proven, but because these wicks are higher than these ones, and these wicks over here are higher than these ones, more than likely we're going to see that movement up until this zone over here. Now also bear in mind when you keep track of your various time frames, you can see here at this point you're looking at like major movements in the currency. It could be the Asian time frame, so you get a lot of movement in that specific area. So that is, when you're looking at your first zone. Okay, there's a question, but you only take the upper top and bottom wicks, not the one under beginning the first zone. Not really, because I'm looking to see the candle that forms afterwards. I'm looking to see that that's the continuation of that push down. The next candle could be part of your zone. It doesn't have to be. It usually isn't part of mine. I'm looking to see the candle that takes off afterwards. That area of consolidation would be considered exhaustion. No, it's basically price accumulating. Wick exhaustion is equal to the tap in the region, which is a reversal, not in the most cases, but it does help you understand that there is a possibility that there is a reversal coming. You have to understand how your wicks are forming at that point. Okay? So you can see, and then if we zoom out a bit, that wasn't too good. Let me do this. I'll stop that. So if you zoom out a bit in this instance, you can see how we turned around and we pulled, and this was like the lowest pull, but we created a higher high off of that piece there. We pulled, but we never broke. Let me do it better. This being the lowest, you can start to see as we start to pull up, you can start to see we never broke this zone again. So even if you took a buy, eventually it would come back to that level again. But the idea is these are short, quick trades, and you're reaching zones. So you can say, okay, this is, I would say this would be the top of my zone at this point because we've had those are those two wicks. We've pulled all the way up through. I'm closing my position there, and more than likely we're going to come back down to this zone again. And like I said, this is from, it's basically a few hours of movement because we're on a 5-minute chart. So we're 10, like basically almost 8 hours of movement, but you can see in that point, that's exactly what's happening there. So we can, yeah, so if we turned around and we went through and we looked over here, you can see where we tapped on the hour, but we never really broke this area here. And then we finally came back down again, but it came up, pushed right back down. There was consolidation. So once again, if we zoom in, we have a bunch of consolidation here. We had that one pull all the way down, touched, but it never touched again until recently in the last couple of days. Ted, do you watch the charts to wait for an entry or just check that when you get to the zone? I do a little bit of both. My trading plan in the morning is to execute on what I currently see because I can get in and out really quick, and I will talk about that. Zones are like magnets. Yes, they are. Price always tends to go back to them. Okay. All right. So here we go. So once again, talking about USD JPY, 4 hour. And what I've done here is I've drawn out our zones. And what we're looking at is, you make a note of the support and resistance area. And what you're looking at is first, like the demand zone, which I've drawn, is a little bit wider, just because you had a lot of wicks coming into it and tapping it and coming back out again. So, when you look and you say this is your demand zone over here, you pulled up and then basically you saw that movement where you're coming back into this range, and then you can see sort of the aftermath, right? So we're at basically 112, 580 or 894. So this is where we were because you can see that candle there, and this candle here matches up with these ones. And then you can see as soon as we tapped into this region here, we pulled right back up again. So once again, this can act as a minor support and resistance area. So be careful because it might not necessarily move as much as you think it's going to happen, but it actually just pulls all the way through. We had a consolidation and a continuation drop into that zone. So you have to be aware of where your zones are. And once again, when you start to look, things start to give away. So this is your lowest support. Suddenly now this wick is higher than this one, so you can say that there's a mini trend starting at that point. We're starting to pull back up a bit, but the overall trend probably was trending down. But once again, depending on your trading plan, you can then get pips on either direction. Why did I draw that region? Okay, I just explained why I draw that region. So it's a little bit bigger because I'm looking at various wicks. So all these wicks over here are tapping that region. So that means that over here in this specific area, there's a lot of traffic. So there's a potential for a lot of traffic in this area here because you have a lot of price in this area specifically. And then it pulled out of that region. So I'm expecting to pull back out again at that point. Price is stalling in that area, yes. What time frame is on the second chart? It's still a 4-hour chart. How do you know how wide or close to draw your areas? It's subjective. It's still the same. They're still the same for. That is consolidation. That is a consolidation area because we didn't have a lot of movement and then it pulled down. So there was a little bit of consolidation for the downward trend before it continued on its way because that was basically about 16 hours of movement at that point. Okay, yay. All right, so here's another area. This is our gold. We're talking about gold, and this is just some information that I passed on to everybody that I'm passing on to you guys now. So, we had a drop from, what I consider like the 1260 area because you can see right away, and this was back in March, the beginning of March. You can see right away, this was a zone that we hit and we tapped it multiple times. So we tapped that zone multiple times, we pulled, and then we tapped into that, which basically was this consolidation area here, and we continued then back up. So my judgment call was we may come back to this area again, or we may then come to this zone because of this wick here. So once again, I don't know the outcome. I don't know what will happen, but currently we're at like, I think 1230. We're in this region over here. So more than likely, we're starting to come into that area here, or even in this zone over here. So once again, it's subjective, and what you need to understand is what you trade what you see. So if I saw that we weren't moving up anymore, chances are this is now going to tell me that we might move up for a bit, but more than likely we're going to go back into this zone over here because of the push that we had originally to get this trend going, right? Because when you look closely at the trend, this is your giveaway, because this one, and now this one are all starting your trend, right? So if we were betting on this, we would say maybe it would continue up to that area again, and we would have issues over here, because we're looking at, now we were in February the last time we came there. So right now we're at, I think 1230, 1233 actually. Let me just open the charts and see. Sorry. Sorry. Yeah, we're at 1230. So at that point, we're at 1230, and this chart right now, we're at 1248. So we've basically come down into this region over here. So what ended up happening was we tapped and went down over here into this region. So we're coming very close. We've hit this zone. We're coming very close again to this zone. So that's what you're looking for and to give you judgment. So now based on candle patterns, you would say, are we going to continue back up, or are we going to continue back down into that zone before we then go back up again? And that's what you're looking for in the overall. Yeah, so it went down to 1196, right? So it dropped all the way down, and so it basically came into another zone in this instance, and then went all the way back up again. So you know what? So we went here, and then we went all the way up through again. So there you go. So I mean, it's very subjective in how you approach this, but once again, you're building out these zones and you're building out the movements based on your overall trading plan. Like if I'm trading off a 4-hour chart, I'm looking for maybe, you know, between, I would say 5 to, you know, 600 pips, or, you know, 50 to 60 standard pips at that point. So 500 to 600 pips, where if I'm trading on a 15-minute or 5-minute plan, maybe I'm looking for only 5 or 10. So it's really subjective in what you're doing with your plan. So you have to understand what frames you're going to work off of, what your pip quota is, what your percentage of return you're looking for. All those things have to factor as you start to do this. All right. So now here is your indicator list. So we're going to talk about indicators now and all the fun stuff that come along with indicators. I think you'll find that these are going to help everybody, and you guys are going to understand that there's so much to learn about it, and so much to understand. So, you know, you have your Arun, you have your directional price movement, you have your McLaren's, you have like a whole bunch of stuff here. It's awesome. There's so many indicators that you can use, and you know, if you want to, you can throw them all up and just have a big old Christmas tree on your MT4 charts or your C trader, whatever you're using. So now the key with this, and I think, you know, this is something that people start to do and they start to ask, is like, you know, what indicators can I use? And like I say, I'm not a big fan of indicators, but at the same time, they can provide you confluence. And as a new trader, maybe you want indicators. I used indicators a bit when I was in a new trading. It helped me a bit, but it also showed me that sometimes indicators don't give you the best information, and it might be something that when you start using indicators and you start using candle patterns, you start to realize that indicators aren't always going to help you. So indicators that I use, but not all at once, I've used MACD, EMAs, Bollinger Bands, RSI, stochastics, Fibonacci, and volume. So all those questions earlier about do you use Fibonacci, do you use this, do you use that, we're going to talk about that now. There's essentially two types of indicators. I mean, you basically have your momentum-based and oscillator-based. So momentum being your averages, oscillator being the way that the price moves. So when people have more than one or two indicators, it's really something that is not going to help you as a trader, because there's only two real types of indicators, which is oscillator and momentum, but each of those indicators, or sorry, those groups of indicators all tell you the same thing, but in different ways. So if you're using like RSI and Bollinger Bands, they're basically telling you the same thing. You know, or sorry, you're using RSI or stochastics, they're basically telling you the same thing. They're momentum indicators. They're going to tell you when things are overbought or oversold. So really, to have a Bollinger Band and an RSI open doesn't make any sense. You either have one or the other. And now we'll go through and we'll talk about what we're doing here. So MACD, basically, you know, any indicator that you're going to have in your charts, and you want to use them if you do, is use the default. They set them up as default because that's essentially the easiest way to use them. If you change time frames or you move into different time frames, you can read up on how to change indicators to get better signals in terms of, you know, what's happening. But once again, you're only using that as confluence. Your candle patterns are always going to give you the best information overall as you start to look at that. So when we look at the MACD as an example, right? So I mean, this is a signal line. You know, it's a bearish signal, which indicates there may be a time to sell. Conversely, when MACD rises above the signal line, the indicator gives a bullish signal, which suggests the momentum of price of the asset is likely experiencing momentum, you know, upward momentum. So what you're looking at is you're essentially saying, okay, when there's a crossover here, we're going to go up, and then, you know, when there's a crossover over here, now we're going to go down. So that is essentially MACD, but that doesn't necessarily always happen in the charts. So when we start to look, and, you know, here's an example of a chart with MACD, the candles sort of start to give away, you know, what's happening before it actually happens, right? So if you start to look at a crossover, so we're looking at this crossover over here in an upward momentum, you can already see that these candles over here, as an example, have already started that trend. So if I go back and I look specifically at this candle here, MACD still hasn't crossed over yet. We have an indecision candle. That's when MACD started to cross over, and we have a continuation up. So it's safe to say if you did a crossover here, you would be okay for it to, you know, do what it needs to do. Now, alternatively, the issue becomes, and the issue arises when you get situations like this, right? Because look what's happened now. We dropped, but we don't have a crossover, but now we're going back up again. So you see where indicators can sort of steer you wrong a bit, and you really want to use candles. But more importantly, if you turned around and said, okay, well, I'm going to draw out, you know, just a mini support and resistance. If I did that, and I turned around and said, okay, that, you know, this is probably another support level, I can see that when I touch here and then when I come back over here, because this indecision candle sort of matches up with this range over here, if I start to see a bull trend, we're going right back up. If we touch that area again, we might be going back down. So you can start to see how support and resistance really works fundamentally in a technical analysis standpoint to gauge where you are. Where, you know, you had all this information here because your MACD was, you know, essentially topped out, like, you know, this section over here was topped out, but you don't know how far you're going down until you actually map out your trade and say, okay, this is the region where I think I'm going, and once I get candle confirmation, now we're moving back the other way, because there's nowhere where we're going down here, but MACD is still moving down. So how long are you going to hold this trade for MACD to do a crossover for you when if you look at the overall trend, we're making higher highs and higher lows, right? Because you can see here we go up, down, up, and we're still moving up in that direction. But MACD is telling me I'm moving down. It's only till once we get to this crossover here where we actually break trend that we see that full push down, which comes back to this area over here, which is basically your crossover again. So you can start to see as you use indicators, and like I always joke about this, and people are like, oh, Ted, you don't use any indicators, and I laugh at people that do, because if you're not doing the overall holistic analysis, and what I mean by that is, if you're not understanding your candles, you're not understanding your support and resistance ranges, and your, all those different areas, it can really mess you up, because you would be sitting here, waiting for this thing to go down, and it's still moving up. So like it's like, when do I exit? Like how do I know when we're crossing over? And then finally, when we get to this point over here, now we're moving all the way through. So it's really important to think about, okay, we've tapped out, but the candles are giving me more information than these indications over here, right? There was no crossover over here, but we went back up. So it's very important when you look at using MACD, or you look at any indicators, that you would really want to draw out your support and resistance lines first. Sounds like you could be missing opportunities. Once again, when you read Trading in the Zone, you'll realize that there are no opportunities that you will miss. Having that kind of, I guess, attitude, or that kind of thinking or thought process, it's going to mess you up. It's not opportunities. You're looking to stick to your trading plan, and you're looking to get the highest probability setups for yourself. Because really, at the end of the day, your candles are going to determine where your movement is, and the amount of pips that you're going to get comes from your trading plan and your overall structure of what you're doing every day. The next break will be probably in 20 minutes. Okay. Moving on. So let's look at EMA settings, so exponential moving averages. So here are your EMA settings that you're looking for if you're doing a trend. There are many documents, and I'm gonna put this in right now. There are many documents in the Google Drive from people that are trading in the groups that have built really, really detailed EMA strategies for specific pairs, for specific time zones. So there is a folder, and I will explain the Google Drive towards the end, but I'll tell you a little bit now. It's called Member Contributions, and everybody that's trading usually adds to that and provides documentation, how they're trading, why they're trading the way they're doing. There's other people that have given webinars. There's other information. So these are settings that are generic, but you can get into more specific stuff if you go in and you start to build your own plan out. So for an upward trend, you're always looking at your exponential setting. The 10 EMA would be on top, the 20 would be below the 10, the 50 would be below the 20, and then the 200 would be below the 50. For a downward trend, the 200 EMA is on top, the 50 is below 200, the 20 is below the 50, and then the 10 is below the 20. Okay, so I'm going to show an example of this as well. Everything is to be approved by me. Not necessarily, just let me know you want to put it in there and I put it in. Usually a lot of the information we just put in there for people's reference, so I don't really approve or disapprove stuff. It's just if you believe if you believe there's a value to it, I always put it in there. So here you go. So we can look clearly right now. This is Euro AUD, a 4-hour chart, and you can see our line. So our moving average for the 10 is a blue line, the 20 is a red line, the 50 is a yellow line, and the 200 is a green line. Now take a look at 200. That's 200 days. So that's why your line is relatively flat. So as you get closer in days, your line gives you a little bit more information. So what you're looking for in that instance is when there's certain crosses, you can see there's a potential for a push up, right? So we had a cross over here, we had a push through. You know, here we had a cross here, we had a push through. So if you're looking at specific things where we had certain crosses, that is what you're looking for, where your EMAs are always matching in an upward trend. So you have that information, and you can see where we pulled back into the almost the 20, and then we had that crossover here, and then we had a push up. So you know what? You don't necessarily have to turn around and take the trade right here. You could wait a bit, and you can still grab that in that sense because now we've crossed over with those EMAs. So once again, this is subjective. There are so many different ways to use EMAs correctly or incorrectly. It's, you know, you're just looking for crossovers and you're looking to see that the pattern or the trend is staying in the same. So these are the moving averages. Oops, let me do this. And now for a downward trend, you'll see here we have the same thing, right? So we came out, your opposite ends now. So your 10 EMA is below your 20 EMA, and your 50 is usually below your 200. And what you're looking for, once again, is you're looking for a cross. So we had a crossover in the instance right over here, which pushed downward trend. We came up, we had another crossover here, which pushed a little bit further down, and we continued forward. Now, once again, it's not always accurate because we have a cross here, and now we have a push up. So it's very subjective, but it gives you insight into it. So if you know that you're in a downward trend and you're out over here as an example, so we had this, looks like a gap over the weekend, we know more than likely we may pull back into that trend. So in this instance, in this gap here over the weekend, we found that we were outside the averages, the moving averages, but as we crossed over, we came back into the bear trend at that point. Usually your 10 and 20s need to cross. Those give you better indication because it's based on your time frame, right? So if you're using a 4-hour time frame or a shorter time frame, your smaller MAs have to cross before your larger ones because that is really going to give you a little bit more of a real-time situation when you're using them. Oops. Why am I going backwards? All right, so Bollinger Bands. I think a lot of people know this already about what they are and what they do, so we'll go through this. Bollinger Bands are essentially a simple moving average. So, you know, you have your middle Bollinger Band, which is a moving average, your upper Bollinger Band and your lower Bollinger Band, they measure deviations. And what I mean by that is where the price is moving at that point. The only thing that we should really know is that they do locate reversals in trends, but it's not necessarily as accurate as you think. And you know, one of the important features about a Bollinger Band is that, you know, if there's no volume or there's no reason for the market to be moving, you'll find that the bands, the upper and the lower bands tend to constrict and they consolidate a bit. So you'll see the candles move closer and you'll see the bands move closer as well. So, you know, here we go with a Bollinger Band again. You can see, you know, you have your upper Bollinger Bands and your lower Bollinger Bands, but more importantly, you start to see where price expands and contracts. So in the instance over here, as an example, we pulled out of the upper Bollinger Band and right back in again. And in this instance as well, we did the same thing where we pulled up and then we pulled back in. It doesn't necessarily mean it's always going to happen that way, but you can start to see where, you know, our Bollinger Band matches up a little bit with the candles, and then we pull back down. Same thing here, we pull out of the Bollinger Band but pull back in. Now obviously you don't know that's happening until after the fact, but it's a good idea to study and to see, okay, where are we at with our candles? So if we're outside the Bollinger Bands, maybe we're going to pull back in, and once again what you're doing is you're looking for your candles to provide you that information. So you see, you know, if you look very closely and you start to draw support and resistance, you start to see where we topped out, we bottom out again, we top out right near our Bollinger Band, bottom out again, top out again, bottom again. So once again, the indicator gives you confluence, but it's not something that you necessarily need because the candles are giving you that information. So you're looking at all this information here and you're saying, okay, this works or this doesn't work, but it's really your candle confirmation is the one that's giving you that at the end of the day. It's giving you that signal to say that we had a consolidation over here in this instance and we had a drop. It's not the Bollinger Band. The Bollinger Band didn't help you in this point. It was the candles that were providing you that information. Same thing over here. Candles provide us information. We drop down. Candle provided us information here. We pulled back up. So you can start to see where as you add various elements of support and resistance, your candle patterns along with your various wicks and also your different ranges or your zones like supply and demand, things become transparent and you can start to gauge where we really think we're moving in the market and where we think the market's going to go just based on that information as well. RSI. So, the relative strength index, it's an oscillator. So similar to what I was saying with stochastics, or MACD, it determines whether the currency is overbought or oversold. The normal settings are, you want to look in between the 70 and the 30. So anything over 70 is usually overbought. Anything under 30 is oversold. So, when you start to look, you start to say, okay, well, this could be oversold. This could be overbought. This area here can be oversold. But once again, that doesn't necessarily mean that price is going to reverse. It's just giving you indication that there's been so much activity at that level. That's why we're at that range. So when we start to look at things and we start to examine, and what I did was I started to pull up and I highlighted, our ranges. So 69, 70, 30. So it should be a 70, but it's 69, close enough. But you can start to see here where we have an overbought and oversold region. We also have candles that are providing you with that information. So here we have an overbought, we have a candle range, and you can start to see where, once again, when you draw out your support and resistance, we've hit a resistance level to push the candle back down a bit. And then here we've hit a support level where now we've started to push the candle back up again. You can start to see where we're coming close, and once again we pull back down. So it can help you and it can give you information, but if you didn't have any of this, you could start to see just from the candle patterns that we have an overall uptrend at this point, right? If you're trending, but we've tapped the top of the trend line and now we're pulling back down. So it's interesting when you add all these things together, if it helps you or hurts you, but it gives you a little bit more insight. But what I'm saying is, not even using any of these items, we can start to see where we have reversals just based on candle patterns and then just the market moving. You're here as an example at like the highest, at a highest resistance range. We're tapping this resistance range. We know we're going to start dropping back down to a support level at that point. All right. Carrying on. So stochastics, similar to, what we have with our, RSI. There's basically two lines. You have the K line and the D line. They help us, and because once again, the overbought and oversold issue is here too. You look at the K line across the D line through the 20 level to identify a solid buy signal. So, if you looked over here as an example, we have a crossover and we're able to push back up. And then if you're looking at the other direction, you have a crossover again, and then you have an overbought region, you're coming down through. So, it's just as the lines cross, that's what's giving you your information to say there's either a bullish or bearish momentum. So here you go. To the right, when the blue line passes above the red line, indicating the market is bullish momentum. So right here, we have bullish momentum going up. And then when the red line is above the blue line, in this instance over here, we have bearish momentum. So it's not as clear here, but we'll see that in a second. When am I going to talk about time session? In trading plans. That's where session starts. All right, so here we go. In terms of what we have here, we have once again, so we have our zones drawn. So you're looking once again at your 80 and your 20 for stochastics. And we have our overbought region here because it's above our 80. And we have our oversold region over here because it's below our 20. But once again, you're looking at candle patterns. Your candle patterns show that we've reached a resistance area. We're dropping down. This helps. Now, what I want to draw your attention to, and this is where looks are deceiving, is we're still overbought here, right? We're still going up. So there's no indication for me that I should be selling until we reach a point where we have candle confirms. So people would turn around and say, and it's funny because people are like, oh, look, we're over the 20, so I must take a sell position here. But there are no candles to give me that confirm that a sell is happening. So if I took a sell in this spot over here, because that's where my candles are, all that's going to happen is we're still going up. So you have to be very careful when you're using indicators because they're not really giving you that full information of, okay, this is what's happening, this is when it's happening. So if you look as an example, as you start to go through, once again, here's the same thing. You have this region here, we're overbought, we're not dropping anytime soon. We haven't seen a drop. It's only until once we get over here, that's when we start to see our drop. So if you're using stochastics and you're using this information, it's just important to realize that as you start to go through this, that your candles will lead you down the right path. This will help you determine, and rightfully so in this instance here, that we're in an overbought region. Most likely this is a resistance area, and we're going to start to go down. Once I get my candle confirms, that matches up with my stochastics, chances are it'll work a lot better that way. But I am just giving myself indication that we're in an overbought region, so more than likely price will start to slow down a bit at that point. Do you recommend to start off using indicators to help learn or just focus on candle patterns? Like I said, you'll find that if you start to use like indicators, you'll start to slowly go away from them as you get better with candle patterns, and most people in these groups don't use any indicators, they just use candles. It seems like 2 or 3 candles is where stochastics matches up. Yeah, more than likely. So you can start to see how they do level up. But I mean, once again, it's easy to see once we've already seen movement or once we see the whole chart. But if you're just looking over here as an example, in this section here, we're already overbought and we're still moving. So where is it that we're going to start going back down? It's easy to see now because we went down over here. But if I had just this section of the chart, I'm just going up still, and this is still going up. So there's no reason for me to take a sell at any position. So it's really important to understand that concept as well of waiting for confirmation. How do you place these indicators on MT4 on the computer? Yes, I will go through that. Seems like support and resistance trend lines and wicks are the way to go. Yes, it does. It is interesting that things are a lot easier when you just look at it. So if I'm going to go insert indicators, I go into indicators, go into oscillators, stochastics, and everything here you can see is standard. Click, there you go. So you can start to see, as an example here, a real live situation in gold. We had overbought, so here we go. So we're already overbought. So look at this, we're already overbought, and we continue to go all the way up. So you go from 1196 to like 1125, 1130, and you're still overbought. You drop, but look how much of a drop there is here. It's very interesting how it doesn't necessarily match the way it's supposed to be. So I mean, if you look at these different situations, you want to make sure that you're really examining what's happening, because there's a lot of instances here where we're almost in an overbought area and then we pull back down. So you want to make sure as you start to review your indicators and you start to review this information, you're looking at your candle patterns to give you information on where there's possible movement for a change in direction, right? So, we had an overall downtrend down. FOMAC came out, pushed it all the way up. We still had a bounce back down, but we're still almost on an upward trend at that point. Can we do that again to place the indicator? Sure. Give me a second. So, object, oops, let's do this. Indicator list. Let's delete, close. Okay, so we have no indicators on this chart, and I'm going to show you again where to go. Yes, the big bullish candle was news. It was FOMAC. It was the interest rate information. Do you ever use the line chart for support and resistance as suggested in Naked Forex? No, some people do. It's just not my style. You can use it though, it's fine. So we're going to add indicators. So you go to Insert, Indicators. You have all your indicators here. You go to Oscillator because that's what they are. You have MACD, you have RSI, you have stochastics. This is where you would enter all that information at that point. So you just check MACD. MACD, everything is set up, and there you go. So you have your MACD as an indicator as well. So it's just going into that indicator list and then choosing what you want. We have a book in the drive that helps you use MT4, so I mean you won't be lost at that as well. All right, so Fibonacci. Fibonacci basically allows you to give you points of reference for both upwards and downward trends, to place various stops along the way. So Fibonacci is very mathematical. I tend to look at them as minor support and resistance areas. So when you start to look at various levels, you can start to see where we have Fibonacci in this instance. It's not something that I use often, but I'll give you an example here. And I mean, we have information on how to use Fibonacci in the drive. So don't take this as verbatim. But ideally, your best numbers are your 61s and your 38s, because that's where the region you're going to hit most of the time is. And you can see here, you don't necessarily hit that area, but you hit the range. So that's something you have to be careful of as well. So when you turn around and you use Fibonacci, and we'll use that right now, and let me just do this. And if I was to use Fibonacci, and I would say, okay, we're going to move from our swing high, we're going to move from swing high to swing low. So, as you start to move up the swing high from swing low, you could start to see here where you tapped up here, and we're going into these ranges, but you can see how price starts to tap these various areas. As you start to go through and as you start to see things, that's what you're looking for. And Fibonacci basically becomes essentially, if you want it, for lack of better terms, support and resistance, because you can start to see, in this instance here, if I drew all the lines according to Fibonacci, you can start to see this, this matches up over here with this area over here. We have this tap over here. We have a tap over here. So it's just another way for you to draw support and resistance, but more importantly, it gives you sort of ranges where you think we're going to have that definition, right? So we came up over to for basically the top. If we're looking to draw down and we're going down, we came and we hit the 23 range. So if you know that you're at 0 up here and we're dropping for a drop at that point, you know that that's where we're going to hit at that point. In terms of Fibonacci, it'll be a range in that zone. And once again, you're always looking at, like, your 38s are going to be like key areas. In this case, your 23s are key areas, and then your 61s are another key area. So if we were saying, okay, potentially in USD JP or in gold, as we're using right now, we've tapped out at the highest level and now we're starting to reverse, there is a possibility for it to come back to this zone. But when will it come back? Once again, that's determination, and it's very subjective. So that's where you turn around and you say, okay, I use these as just a guide. It's not necessarily the be-all, end-all, but it's more of just a guide to help me to determine where I think price is moving. And I think that's something, as you start to get better in trading is you start to realize a lot of things are subjective at that point. Volume, very straightforward. This indicator helps you to let you know that there's a lot of volume in that particular session. Really, you can use this, but I mean, the biggest train of thought or the biggest tip here is you're trading currencies when those markets are open. So if you're trading US dollar currencies, trade them in the North American session. If you're trading Euro currencies, trade them in the Euro session. If you're trading Asian currencies, trade them in the Asian session. Try not to overlap. Obviously, if you have like a pound USD, you might find that'll move through the Euro session and also the North American session, but not as much in the afternoon as an example. So here's where you build out your trading plan. If you work 9 to 5 and you know that you're not going to be home during the North American session or the London session as an example, you set yourself up to trade the evening. So, you know, in the London session, maybe you're trading the early North American session. In the North American session, maybe you're trading the Asian session. So that's how you build out your trading plan and you get comfortable with those pairs at that point. Yeah, so with Fibonacci, swing high, swing low. That's basically how Fibonacci works at that point. All right, so we're done. Topic 3.